Hey there, Phil here. One of the most important parts of setting up a realistic budget is to get your bank account structure right. And that's especially important if you have a mortgage. So what I'm going to take you through now is the ideal bank account structure that I use with all my clients if they have a mortgage. Okay, now what we have in the center here is the basic bank account structure. So firstly, 3 accounts is what we're after. 3 very simple accounts. In the center here, we have the main working or central account. Now the main working or central account needs to have all the bells and whistles of a normal bank account. In other words, you need to be able to do direct debits from it, you need to be able to do periodical payments and have transfers, etc., coming from that account. You don't want any restrictions to the amount that you can transfer, and ideally you have a card attached to it. So that's your central working account. And what you do with that is all of your income, all sources of income should go into this central account. And by all, couples, yes, I mean all. Having 2 bank accounts, separate bank accounts, running it separately does not work if you're trying to get ahead financially. Every budget has some sort of leaks to it, and I can guarantee that if you've got 2 budgets going over here, 2 sets of bank accounts, you're going to have double the leaks. Plus, there's no accountability, and it's very hard to be on the same page financially when you're managing your finances like that. So couples, please, 15 years of financial coaching have taught me you are much better off being on the same page. So we've got this central account here. All sources of income come into this one place. When it's coming into the one place, it is so much easier to track and control. All comes in here. Now, with the grandma's jars budgeting system, basically it's like having physical glass jars where we've stuck a label on the front of that glass jar as an expense, and we've also identified how much we need to put into that glass jar each month so that when that bill turns up, I can take the money out and I can pay the bill. So what we're trying to do is accumulate in our jars throughout the months money so that when all the bills and expenses turn up, the money is just sitting there to pay it. So all of that money should stay in this central account. So you can see I've drawn some pretty little glass jars here. They're actually virtual jars in the grandma's jars. It's not real jars. We've got virtual jars here which are accumulating money for all our future expenses, and that all stays in the central account. What then happens, one jar, which is our everyday spending jar, that's the groceries, petrol, parking, entertainment, takeaway, bought coffees, bought lunches, dining out, all those discretionary expenses where we tend to waste the most money. That money should be transferred into a separate everyday transaction account. Really important that you do this. This saves my clients literally hundreds of dollars every month because they've identified a figure that they think is realistic and reasonable given how much they earn. And then they've got a physical boundary, which is this bank account, as well as the budget, telling them this is all you've got left. If you spend it all, bad luck, baked beans and mashed potatoes for the rest of the month. So that's your second account there. The third account is your savings account. So if we have $5,000 coming in, so if we have $5,000 coming in as income, we allocate $3,000 to all of our jars. We top all our jars up, and that takes $3,000 for the month. Then we put $1,000 into our everyday jar, which means we have $1,000 to pop up into savings. Every single bank account has a very specific purpose. Very powerful. Now, when you have a mortgage though, the type of account that you want to use here are typically, where possible, offset accounts. Offset accounts are offered by most of the major banks today, and they are very powerful. Because what an offset account does is, let's just say I've got a loan for $200,000 and I'm paying 5% interest on that, then that means I'm paying about $10,000 interest a year. However, if I've got an offset account where I've got money sitting in that offset account, the bank considers that as though it were money paid off the mortgage, and therefore they don't charge you interest on it, even though it's sitting in a separate bank account and perfectly accessible by you. So let's just say I had a bank account with $100,000 sitting in it. I've used $100,000 because it's easy maths, not because most people have $100,000 sitting in an offset account. $100,000 sitting in an offset account, that means the bank is now going to charge me only interest on $100,000 because it considers this $100,000 paid off the mortgage. So I'm only paying interest on $100,000, which means that at 5%, my interest bills now drop from $10,000 to just $5,000. And the best part about that is I've saved myself that $5,000. So it's like earning 5% interest. So I'm earning 5% interest. And not only that, okay, you can't get tax on it because you've actually saved it, not earned it. So you think about what you're getting in bank accounts these days, you're lucky to get 2 or 3%. But if you can put money into an offset account, you can save yourself 5 and not pay any tax on it, which is just beautiful. So what we want to try and do is, where possible, you want your savings account to be an offset account. And if you can, actually all 3 of them should be offset accounts. That would be perfect. But a lot of the banks don't allow you to do that these days. They sometimes say, look, you can just have one. So if you're allowed to have one, I would suggest to you that you make it your savings account up here. If you can have 2, then it's your central account. And then last of all, if you can have 3, then you want it to be your everyday account. Offset accounts are really, really powerful. And don't let the banks tell you that offset accounts are the same as redraw facilities. They are not. Yes, they might show you the same numbers, but I can tell you from a behavioural and psychological perspective, they're completely different, and the bank knows it. So, offset accounts, not redraw facilities. Set up the right bank account structure and you will save yourself hundreds of dollars every single month. Now, if you are interested in saving money, if you're interested in spending less, if you're interested in breaking the paycheck cycle or paying off debt or achieving lifestyle goals that are really important to you, can I encourage you to subscribe to this YouTube channel? Every Tuesday and Thursday, we will release videos about managing your personal finances. So please subscribe below, and I look forward to seeing you in the next video.